Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines we're tracking this evening. Sensex and Nifty hit a record high after a late recovery. Sensex scaled 74,000 for the first time, gaining over 400 points. Nifty moves closer to 22,500. Shares of JM Financial tumble after the RBI crackdown, even as the company claims there are no material deficiencies or governance lapses. IIFL Finance hits the 20% lower circuit for the second day running despite a $200 million liquidity commitment from Premwatsa's Fairfax, which already owns a sizable stake in IIFL group companies. GST Enforcement Agency cracks down on a dozen FMCG companies, including ITC, PepsiCo, Balaji Wafers, claims companies have been paying 12% GST instead of 18% on extruded snacks and fried pellet snacks, claims tax evasion worth over 1,000 crore rupees. Food inflation is hurting consumption, but this is only a near-term problem, says Nestle India's Suresh Narayan. He's upbeat about India's consumption in the long term. That's an exclusive. The union government steps up its foreign investor outreach, asks central public sector enterprises to hold roadshows for investor feedback on its calibrated divestment strategy. Sources say that the government recently showcased GIC-RE during roadshows in the United Kingdom, USA, Singapore and Hong Kong. Confident of winning the upcoming elections, the Modi government is charting an action plan for the third term. Sources say reducing compliance costs and scrapping penal provisions of law will be a major focus area. Promises high capex roadmap in the full budget in July. The Supreme Court highlights a trust deficit between Kerala and central government. Kerala terms the centre's borrowing cap arbitrary, submits that states have their fiscal responsibility framework. Centre defends the cap and argues against reckless borrowing. The court nudges Kerala and Centre to resolve their deadlock through a meeting. Supreme Court pulls up officials in Uttarakhand over illegal construction and felling of trees at the Jim Corbett National Park, says politicians and bureaucrats have thrown public trust in the dustbin. Orders the CBI to submit a report on its investigations within 3 months. US President Joe Biden calls on Hamas to accept a ceasefire deal as negotiations enter the fourth day. Hamas claims the ball is in Israel's court. Meanwhile, the World Food Programme says a convoy carrying aid was denied entry into North Gaza by the Israeli military amidst fears of a famine. A rematch between Joe Biden and Donald Trump is now almost certain as both leaders dominate the Super Tuesday primaries. Nikki Haley will walk out of the race after Trump wins most of the primaries. 48 hours ahead of Women's Day, a damning report from the World Bank. A new study finds no equality for working women in any country in the world. Details coming up on India Business Hour. Well, let's begin with a quick look at the day's market action. The stock shrugged off early weaknesses on the Lal Street to hit record highs. Sensex reversed losses in late trade to end with gains of over 400 points. Sensex also managed to end above 74,000 for the first time. The Nifty, meanwhile, gained over 100 points to move closer to the 22,500 mark. Bank stocks led this rally, especially private sector banks. Mid-caps, meanwhile, underperformed the blue chips, even as it clawed back some of the losses in late trade. Well, speaking of market action, shares of JM Financial hit lower circuit in early trade today. This after the Reserve Bank of India barred the company's subsidiary JM Financial Products from financing against shares and debentures. The Reserve Bank's limited review found material deficiencies in their loan sanctioning process, especially with IPO free financing. Now, the central bank also flagged governance issues within the company. However, JM Financial Products maintained that there was no material deficiencies or governance lapses. In a statement, the company said that the new income from the IPO financing business in crores is the first 9 months of FY24. This constitutes 1.5% of the total income, financial products, and 0.3% of the consolidated income of the company. The company went on to say that the impact of the RBI order in monetary terms is not material. Shares, meanwhile, of GM Financial did manage to recover some lost ground in the late trade, but still ended really deep in the red. Meanwhile, shares of IIFL Finance hit the lower circuit for the second straight day. The stock has fallen 36% in the last 2 days. This after the Reserve Bank ordered it to stop sanctioning and dispersing fresh gold loans. Now, this stock fell despite a $200 million liquidity commitment from Prem Vatsa's Fairfax Group, which owns a sizable chunk in the IIFL Group. Now, Fairfax owns 15% stake in IIFL Finance. It also owns more than 27% in IIFL Securities and holds a 33% stake in 5paisa Capital, which is another IIFL Group company. Now, in recent months, the Reserve Bank has imposed business restrictions on several entities, including NBFCs, fintechs and credit card companies. Now, Ritu Singh is here joining us with a quick roundup of all the action that the RBI has taken and the rationale.
Whether it is a 1 or 2 lakh rupee penalty or restrictions on a specific segment, the complete shutting down of a business, or even the supersession of boards, we've seen a spate of actions against financial entities by RBI, and some of them more recently have even been of an unprecedented nature. And the larger message we gather from these actions is that even if it seems harsh in the immediate term, the intent is to make the system stronger and help these financial entities grow their revenues, grow their profits, but in a risk-calibrated manner, because ultimately the buck stops with RBI when it comes to maintaining financial stability, and when it sees any potential risk emerging, it takes action. It is also very clear that compliance cannot be just another checkbox exercise, and good governance must be a priority. Now, from our understanding of how RBI and these actions work, these are well thought out, deliberated actions, and to say that these restrictions are a moment of surprise for the entity involved will be incorrect, because there's plenty of internal dialogue that happens before such actions are taken. If dialogues don't work, there are penalties. If those don't work, there are warnings, and in severe cases, these embargoes are placed or businesses may be shut down. The nature of these actions that we've been seeing from RBI recently has been both targeted and broad-based as required. So on one hand, you saw what happened in the case of the gold loan business of IIFL Finance, or the digital banking business of HDFC Bank, or specific product lines of Bajaj Finance, and in other times more broad-based, like what the regulator did with unsecured loans. But the message is clear: risk management, compliance and governance must be prioritized, and if there are discrepancies, entities must course correct or face action, because the regulatory attitude itself is changing, making a very clear distinction in terms of what is tolerable and what is not.
Right, Ritu, thanks a lot for that. Now, Reserve Bank of India has directed banks to allow eligible customers to choose from multiple card networks at the time of card issuance. Card issuers are also not allowed to enter into any agreement with card networks that restrict them from accessing services offered by other card networks. Issuers who issue credit cards on their own authorized network are exempt from this rule. Well, moving ahead, here's a CNBC TV 18 exclusive. The Directorate General of GST Intelligence has alleged that a dozen FMCG companies have evaded tax worth over 1,000 crore rupees. Timsy Jaipuria is joining us now with more details. Timsy.
Well, that's right. The Directorate General of GST Intelligence is acting against FMCG players. What we pick up from sources is that FMCG players like ITC, Pratap Snacks, PepsiCo, Balaji Wafers, RP Sanjeev Goenka Group Company, Guilt Free Industries, etc. are under this action. And the action is against about 10 to 12 FMCG companies on alleged tax evasion linked to classification issues. We also pick up that DGGI has sent notices to many of these FMCG companies for paying lower GST rate on extruded snacks and fried pellet snacks. Remember, government had clarified that any snacks which has been prepared by extrusion process should attract 18% and not 12% as is being paid by the industry currently. DGGI allegations includes about 500 crore rupees of GST evasion by ITC Limited, 300 crore evasion by Pratap Snacks, about 175 crore plus evasion by PepsiCo India, 19 crore evasion by Balaji Wafers, close to 40 crore rupee evasion by RP Sanjeev Goenka Group's Guilt-Free Industries Limited, 68 crore rupee evasion by Sarveshwar Foods and many others. When we reached out to several companies who are named under this action, ITC was the first one to respond, and their spokesperson said that we are unable to comment as industry-wide inquiries are on. Meanwhile, we are awaiting responses from several other companies who are covered in this particular action. Let's see what happens finally. How much of the money do these companies come out and pay, whether based on voluntary payment or post the show cause notice? That is something that we'll have to wait and watch out for.
Thanks a lot for that, Timsy. Now, the big newsmaker this evening, food inflation is hurting consumption, but this is only a near-term problem. That's the word coming in from Nestle India CMD Suresh Narayan, speaking to CNBC TV 18 Shireen Bhan at the Yes Bank Growth Summit. Narayan maintained that he's upbeat about India's consumption in the long term.
You know, I've always been an optimist of consumption in this country. I mean, whether it is 58% or 61% or 62%, I don't think is fundamentally the issue. And these are blips in a long saga that we will have. I think the fundamental issue on consumption, where it is hurting today, is because of food inflation. I mean, I would say from my perspective, food inflation clearly has meant that the price-value equations have gone awry in the market. And that means that the volume growths have been under pressure.
Well, here's a CNBC TV 18 exclusive. A promoter group of Mahindra and Mahindra is looking to sell 93 lakh shares via a block deal. Sources have told CNBC TV 18 that the price range of the block deal will be between 1911 to 1970 rupees per share. This is in the price range, is at a discount of 3%. Well, speaking of block deals, shares of food aggregator Zomato came under pressure after a large block deal on the bonuses over 2% equity worth over 3,000 crore rupees changed hands in today's trade. The shares were bought at an average price of 160 rupees per share. This is a 3.5% discount to Tuesday's closing price. Sources tell CNBC TV 18 that Ant Group's Singapore arm is the likely seller. Now, we told you first, it's official now. Samvardhan's Motherson's promoter, Sumitomo Wiring, has sold 4.4% stake in the company via block deals. Sources tell CNBC TV 18 that the deal size was likely to be $427 million. The Japanese company has said that it will not sell its remaining 10% stake for a period of 9 months. And the government has stepped up its foreign investor outreach. Government sources have told CNBC TV 18 that the centre has asked central public sector enterprises to hold roadshows for investor feedback on its calibrated divestment strategy. Sources have also told us that the government's divestment strategy has received a positive response. Meanwhile, the government will divest up to 7% stake in NCL via the offer for sale route. The offer for sale opens tomorrow for non-retail investors. Retail investors can participate on 11th of March. The government will sell up to 5% stake with an option to utilize a green shoe option of 2% stake. The government currently holds nearly 80% stake in NLC. Well, moving ahead, confident of winning the upcoming Lok Sabha elections, the Modi government is charging ahead with an action plan for the third term. Sources say that cutting compliance costs and doing away with penal provisions of laws will be a major focus area. Parikshit Luthra is here joining us now with more details. Parikshit, give us a sense, what can we expect?
Well, the government is closely working on a roadmap to increasing the manufacturing footprint in the GDP, or the contribution of manufacturing to the GDP, and there would be a plan for this in the budget that is delivered in the month of July. We also believe that the government will continue with this high capex push, adoption of digital public infrastructure, and the push for infrastructure. All of this will find strong mention in the full budget that is delivered by the finance minister once the elections are over. We also believe that the Viksit Bharat roadmap that the government has been working on will be shown in the full budget if the Modi government, if the NDA government is elected for a third term. We can also tell our viewers that Jan Vishwas law that was brought by the Narendra Modi government in its second term, there will be a second version of it to decriminalize more laws in the country, remove penal provisions so as to assure businesses and businessmen that they will not be penalized for petty offences. At the same time, the government has just completed a study on cost of regulations across different states in the country, and this is also going to be released in the next few months in order to make it more competitive for states to reduce the cost of compliance. In fact, reducing cost of compliance will be the big focus in the coming months, especially after the election. So all eyes on the union budget after the elections, because that will have the agenda, the roadmap for Viksit Bharat, or a developed India by 2047.
Meanwhile, the Supreme Court has pulled up officials in Uttarakhand over illegal construction and felling of trees at the Jim Corbett National Park. The top court has said that politicians and bureaucrats have thrown the public trust in the dustbin. It ordered the CBI to submit a report on its investigations within 3 months. Well, staying with courtroom action, the Supreme Court has highlighted a trust deficit between Kerala and the central government. The Kerala government has termed the centre's borrowing cap as arbitrary. The state government has submitted that states have their own fiscal responsibility framework. Centre has defended the cap and argued against reckless borrowing. The court nudged Kerala and Centre to resolve their deadlock through a meeting. In some international headlines now, US President Joe Biden has called on Hamas to accept a ceasefire deal as negotiations enter the 4th day. Hamas claims that the ball is in Israel's court. Meanwhile, the World Food Programme says that a convoy carrying food aid was denied entry into North Gaza by the Israeli military amidst fears of a famine.
The hostage deal is in the hands of Hamas right now, because they've been an offer, rational offer. The Israelis have agreed to it, and waiting to see what the Hamas does.
Do you think it's still by Ramadan?
Well, there's got to be a ceasefire, because Ramadan, if we get into a circumstance where this continues through Ramadan, Israel and Jerusalem, then it could be very, very dangerous. So we're trying hard for that ceasefire.
Meanwhile, a rematch between Joe Biden and Donald Trump is almost certain now as both leaders dominated their Super Tuesday primaries. Nikki Haley will walk out of the race after Trump wins most of the primaries. Well, here's a CNBC TV 18 exclusive. Negotiations on the India-UK Free Trade Agreement are likely to spill over beyond the general elections in India. Sources have told CNBC TV 18 that the Indian government does not want to rush any policy decision and prefers a thorough deliberation process. A British delegation is currently in India for a week for the latest round of talks. Well, coming up on India Business Hour, 48 hours ahead of Women's Day, a damning report from the World Bank. A new study finds that no equality for working women in any country in the world. Details in just a bit. And you can also catch all CNBC TV 18's news and updates on Facebook, X, Threads, Instagram, and JioCinema. Well, in the last few months, Maharashtra has seen a flurry of large ticket infrastructure projects being inaugurated and flagged off. The BJP and its allies see these projects as key ammunition for their campaign to win the state that houses India's financial capital. As a part of our continuing series, Election Exchange, CNBC TV 18, Santya Gora finds out just how much infrastructure development will push the needle.
There's the 55,000 crore rupees 701 kilometer Mumbai-Nagpur Samriddhi Mahamarg, the 17,840 crore rupee 21.8 kilometer long Atal Setu Sea Bridge, and the 13,000 crore rupee 29.2 kilometer long Mumbai Coastal Road. These are just 3 of the 23 big-ticket infrastructure projects that the ruling Eknath Shinde government in Maharashtra has been showcasing heavily. In all, the government claims it has projects worth a cumulative 8 lakh crore rupees in various stages of construction across the state and believes these will boost manufacturing, industrial activity and tourism in Maharashtra. Small wonder then that every political party in the state wants credit for these projects.
ऐसे कई प्रोजेक्ट है, मेट्रो के का प्रोजेक्ट है जो हमारी सरकार आने के बाद बहुत तेजी से उसका स्पीड बढ़ा दिया. डेवलपमेंट, इंफ्रा प्रोजेक्ट, इस पे हमारी सरकार फोकस कर रही है और आगे जाके और कई ऐसे एक्सेस कंट्रोल रोड है, जैसे मुंबई गोवा है, जैसे नागपुर मुंबई जो हुआ उससे हम और भंडारा, गोंदिया, गढ़चिरौली तक लेके जाएंगे।
Since it came to power in July 2022, the Shinde government claims it has sanctioned projects worth 54,000 crore rupees and has accused the previous Uddhav Thackeray government of stalling construction work during its tenure. Uddhav Thackeray's Mahavikas Aghadi government, meanwhile, says it sanctioned projects worth 1,30,000 crores between 2020 and 2022 and adds that a lot of the projects that have achieved completion or are nearing it were its brainchild.
Governments come and go, but some things that are passed, funds that are passed, infrastructure projects that are actually on paper trying to come into practicality, they go with time, they don't stop. So it does not mean that the other person didn't do it and the person who's cutting the ribbon is doing it.
While every party is taking credit, none of them are accepting responsibility for delays and cost overruns. For instance, construction of the coastal road began in 2018 and has already missed over 3 key deadlines. A query under RTI has revealed that these delays have led to a cost escalation of over 200 crore rupees. Similarly, the Mumbai-Nagpur highway's initial estimated cost of 46,000 crore rupees is a long way from the latest estimate of 55,000 crore rupees, and the project's inauguration has also been delayed by over 2 years due to the COVID-19 pandemic. Experts say the incessant delays that have accompanied almost every infrastructure project in the state, blame game for the delays and cost run-ups, and political parties rushing to take credit for every milestone is not lost on the public. However, they also point out that any brownie points the political parties may score on account of infrastructure development will probably be contained to a small portion of the voting public and restricted by geography. Because a person living in the Vidarbha region, for instance, is not directly impacted by projects like Atal Setu and Coastal Road in Mumbai.
Mainly in cities like Nagpur or Pune, Nasik and Mumbai, it will definitely affect.
No doubt, this government is definitely going ahead with a lot of projects, but whether they will have a kind of a resonance with the voter is a question mark, and that even Mahayuti Aghadi is aware of, or the Mahayuti per se is aware of. But undoubtedly, in certain pockets, it matters.
महाराष्ट्र में तो बहुत अच्छा हो गया, आज तक किसी ने किया नहीं है, कांग्रेस के राज में भी नहीं ऐसा हुआ, करने वाले हैं, करेंगे, करते रहेंगे, ऐसे बातें करते, लेकिन आपको आज देखने जाएगा तो हो रहा है।
जगह जगह रोड खोद देते हैं ये लोग और फिर ये महीनों के लिए छोड़ देते हैं, उसको खोद के तुरंत काम चालू नहीं करते, जिस वजह से सब पूरा ट्रैफिक जगह जगह पे, आप कहीं भी जाएंगे तो आपको ट्रैफिक ही मिलेगा।
But the BJP and its allies are confident being associated with these projects will give their alliance an upper hand, and the Eknath Shinde, Ajit Pawar, BJP's Mahayuti alliance is planning multiple inaugurations in the weeks leading up to the general elections. In Mumbai.
Well, the International Women's Day is on the 8th of March. Ahead of that, the World Bank has released a damning report showing that there is no equality for working women in any country in the world. Arundhati Ramanan has joining us now with more details. Arundhati.
No country provides equal opportunity for women, not even the ones with the wealthiest economies. That's the sobering finding of a World Bank report ahead of Women's Day. For the first time, World Bank investigated the impact of childcare and safety policies on women's participation in the labour market across 190 countries. The report pointed out women enjoy fewer than 2/3 of the rights of men when legal differences involving violence and childcare are taken into account. Sample this, on an average, women enjoy only 64% of the legal protections that men do. That's not all. Of the 98 countries that have enacted laws mandating equal pay for women for work of equal value, only 35 countries that have adopted the law or enforced the issue to address the pay gap. But the most worrying factor, women's safety. Women enjoy barely 1/3 of the needed legal protections against domestic violence, sexual harassment, child marriage and femicide. The report said that while 151 countries had laws against sexual harassment in the workplace, only 40 had laws that covered abuse in public areas or on public transport, meaning women were not protected on their way to work. Addressing the childcare gap would immediately lead to a 1% increase in women's participation in the labour force, but only 62 countries have quality standards governing childcare services, which might help women go to work while their children remain in care. The report also highlighted that women face impediments in the area of entrepreneurship, as just 1 in 5 economies has added gender-sensitive criteria for public procurement processes. Women also earn just 77% of what men earn, as per the report. Bridging the gender gap can have a massive impact on the economy. The report says global GDP can increase by a whopping 20% if women are treated as equal to men.
Well, with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC TV 18.